welcome to our special pre-budget series, What the World Wants from India. Historically, foreign investors have keenly watched the Indian budget, as of course have domestic investors, for cues about the government's reform initiatives for the next year or years. The current budget comes after an unprecedented demonetization of 85% of the currency. Foreign investors have also been selling out of emerging markets in general and India in particular since the Trump victory, which coincided with the demonetization day. We kick off our much-watched pre-budget series, What the World Wants, from India with Russell Napier. Russell Napier is now an independent strategist and co-founder of ERIC, an online platform for the sale of high-quality, individually priced investment research. But he has been a long watcher of India when he was at the CLSA. Mr. Napier, thank you very much for joining us on this series. Well, first up, the budget comes close on the heels of an unprecedented demonetization. Do you think the demonetization has dislocated the Indian economy seriously?
Yes, I think it has. It's a very major reform. It's a very brave reform, and I think it has. But obviously it's something that passes, and it's something that goes away. I think the problem is that it's confused, or being confused by some people, with something else. And there is a global trend underway where people worry that the rule of law itself is being overpowered and surpassed by strong rulers. And that would clearly be something entirely different and very, very worrying. And it's something that we see in countries like Turkey, we see it in countries like Hungary and I think potentially Poland as well. So I think it came at a bad time because some people looked at it to signify something else. So the crucial thing about this budget is that it has to live up to previous promises of the Prime Minister in terms of reform, but reform within the rule of law, so that I think it's just a perception, and a wrong perception, that somehow the government of India is capricious, acting outside the rule of law. It isn't, but it would be really wonderful if the budget could confirm that and make it clear to everybody that India is not following the route of some other emerging markets.
Okay. Therefore, because you believe that there is a bit of dislocation of the economy, do you think the budget should rely heavily on, say, some kind of consumption-boosting techniques or consumption-boosting policies or any other policies to boost the economy, to the extent of even ignoring perhaps the fiscal discipline that it has followed in the past 2-3 years?
No, I don't think that's necessary, because I think this is temporary. If you have something in place that affects the economy and creates extrapolative expectations and changes behaviour, then you might want to think about doing something to counteract that with your fiscal policy. But if this is a storm that passes, then everything will right itself once we get the cash flowing effectively around the economy again, which is clearly taking much longer than anybody would have wished. But the real opportunity for India in this budget is to point out how different it is from other places. So the focus on the budget, to the extent that it is once again about investment, creating investment opportunities, opportunities for foreign capital, that sends India in one direction, while some other emerging markets are going in a very different direction, and would once again reaffirm the faith that Prime Minister Modi is going a different way. So that's the key to this budget, to show very clearly that India is heading in a different direction than other places.
There is a lot of interest groups, especially from corporate India, from India Inc., which has been asking for perhaps lower corporate taxes or lower personal income taxes so that consumption gets boosted. Do you think that's necessary?
No, once again, I don't think it is. I think the demonetization is a temporary thing, and as cash floods back into the economy, it changes. It has only a long-term impact on consumption if it changes the behaviour of consumers. But most consumers realise this will pass and consumption will revert. So I think it's unwise to change fiscal or monetary policy, given their medium to long-run impact, against something which is a fairly unique little thing that's happened. Usually, if an economy gets buffeted by a force, it's not predictable, but it's within the range of expectations. This is a new one, This is a new one, and I think people are saying, oh, it's just like these other ones, and you have to do something to counteract it. But it's a new one, but it's one that passes, which you wouldn't say if it was a surge in the oil price. We wouldn't know when it would pass. If it was a collapse in global growth, we wouldn't necessarily know when it would pass. But with this one, we kind of know it's coming to an end, and therefore consumption should normalise. And I think it would be wrong to change policy settings just because of this.
Okay. Well, there is a category of people who believe that President Trump will perhaps look to boost US economy through cutting off taxes, and therefore, for sheer comparison, the Indian government should also offer slightly lower taxes. At least sentimentally, that will be a positive. Is that an argument at all?
But the lower taxes should be there to encourage investment, not necessarily to encourage consumption. The Trump policies will be what they will be. In terms of its impact on India and the rest of the world, that will really depend upon whether it has an impact on America's current account deficit. That would be how it would spread growth around the world. And I'm really concerned, along with many other people, that no matter what President Trump's policies are in terms of stimulating US growth, that would not necessarily feed through into a bigger current account deficit and help for the rest of the economy, because he has many policies that would offset that stimulation in terms of its impact for India. One thinks of the change in tax policies, which may create reshoring. One thinks of overt protectionism, which may be possible. One thinks of the drilling for oil, which would once again shrink America's current account deficit. So in terms of India, we are in a sea change in the world, and what it really needs to do is convince the world that it remains and continues to be a good place to invest and put money. So I'm always in favour of creating lower tax burdens for people to invest. But I think the consumption will right itself once the storm of demonetisation passes.
Okay. Well, there is another fear in some quarters. There is a series of states, 5 states, which will be going to the polls, and the demonetisation, to be fair, has created a little bit of rural distress, which you say may be passing distress. So there is an expectation that he should do, the Prime Minister that is, should do something in terms of a transfer of resources for the poor. How would you receive some such a step of transferring a little more money for the lowest deciles of the population?
Sure. I mean, it has clearly caused distress, and the distress it causes for poor people is much more important than the distress it causes for wealthy people, because it relates to their basic needs. If there is some temporary measure to fix this problem while we await the full remonetisation of the system, then that is absolutely necessary for the good and health of the poorer people. But that is a temporary issue to be solved and targeted at those people. But changing tax policy based on overall consumption, in my mind, would be a mistake. So there may be some reason for some target fiscal policy to clearly help people who are in distress. I don't disagree with that. But the idea that the whole of consumption needs boosted seems to be unlikely. The number one priority has to be the remonetisation of the system. Okay.
I don't know if you're familiar with another problem that's been cropping up, that mutual fund investors are also likely to get taxed because of a new interpretation by the Board of Direct Taxes in India. If you're familiar with the problem, do you think clarity on that or lack of clarity on that could be decisive?
Yeah, I'm not familiar with that specific problem, but there is an important message here, and the important message is this. Foreigners are reconsidering emerging markets, and they're reconsidering risk. If the government of India does anything, whether it's aimed at domestic investors or not, to increase the riskiness of investment, this is exactly the wrong time to do it. Anything that can be done to make it clear that investing in India is less risky, the government is not capricious, the government is sticking to a target of reform and encouraging investment, will have huge positive benefits for India at this time. It's not quite a fixed pie of money that flows to emerging markets, but it's somewhat like that. And there's a real opportunity now for India to attract more of that at a time when it's being repelled from other more risky things. So this is not a time to play around with the rules on investment in general, whether it's specifically for this measure or not.
Okay, I come to that, the attitude of foreign investors to emerging markets in general in a minute. Let me just finish another important budget question about the extent of fiscal deficit. For the past 3-4 years, the new Modi government definitely has been bringing down its fiscal deficit from around 4% when it took over to 3.5% of its total of the GDP at this point in time in the year currently underway. The expectation is that they should reduce it further, going by their old timetable. If they were not to reduce from 3.5%, would that be taken very negatively?
No, I don't think it would be taken very negatively. It was clearly not as positive, but not very negative. You look around the rest of the world, you look at some of the scale of fiscal deficits elsewhere, and 3.5% I don't think is seen as unmanageable. Once again, the crucial question here, when you're going to run a deficit, when the government is going to soak up some of the savings, is how many foreign savings can you attract? So running a fiscal deficit at 3.5% is clearly soaking up quite a bit of India's domestic savings. But there is a huge pool of foreign savings which is available if it sees the right policies being followed everywhere else. So I just wouldn't fixate on the size of the fiscal deficit. What is much more important, and we've seen this throughout the history of emerging markets, is that creating the policies that attracts foreign savings. And India has been doing that successfully now for a few years. And the crucial key thing is to keep that on track, in which case I think the size of the fiscal deficit would not be an issue.